are due to,
I
cardiac
mean, lifestyle,
issues.
lifestyle issues.
Lifestyle issues, absolutely.
Absolutely. Big one.
Okay, well, let's move on. Oil marketing companies are in focus. Crude prices are now at a one-year low of $75 a barrel. Of course, this was last week. But today, if you look at it as of today, it's $80 plus. But this has led to a recovery in marketing margins, which were under a lot of pressure for these companies. Since there has been a gradual increase in crude prices, what's the outlook for OMCs? We're joined by MK Surana, the former chairman and managing director at HPCL, and Harshvardhan Dole, the vice president institutional equities at IIFL. Gentlemen, morning to both of you. Harsh, I just want to start with you to, set up the interview. What kind of upside do you see for some of these oil marketing companies, considering marketing margins are now at a 10-month high and most brokerages across the board have sort of raised their earnings estimates as well? So just tell us, what are the ballpark numbers that you see for most OMCs?
So if you were to look at the OMC pack, on an aggregate basis for the first half, they've reported loss of around 18,000 crores. And if you were to go by the consensus numbers, the consensus is trying to forecast that for the second half, the oil marketing companies collectively will register almost 40,000 crores of profit pool. And if you were to believe that to pan out, then I think OMCs are still trading at 3 to 4 times earnings. And these can comfortably trade at 8 to 9 times on a normalized earnings, which suggests that good amount of money can be made in oil marketing companies if this benign oil price environment sustains, say, over the next 3 to 6 months. I'd like to caution here. Typically, what we have seen is whenever we get into period of elections and state elections, one would have to be, toning down the earnings expectations as well, because there are direct, indirect price controls, which we have seen thus far. And next year, if you plot, there are quite a few elections around the corner.
Yeah.
So while I would want the OMCs to make money, one has to be a bit realistic.
No, so, by the way, Mr. MK Surana, of course, former CMD, HPCL is also with us. Harshvardhan, at these, if prices stay here, general expectation is that prices won't see a big spike, but there's no great fall coming as well. That's at least the expectation. So if oil prices stay here and prices at the pump also don't change, you think, as you said, earnings multiples could come up to 7-8 times? It's possible?
Quite possible. That is what, typically OMCs deserve to trade, given the fact that these are generating decent amount of cash flows, and across the cycles, the return ratios have been upwards of 20%. And mind you, they have grown their businesses without diluting their equity base over a period in time. So 8 to 9 times is a fairly conservative estimate, and still at a discount to global peers if you try to compare them.
Okay. Mr. MK Surana is also with us. Mr. Surana, higher crude prices continue to be an issue, and there's been no change in the petrol and diesel prices for, I think, about 6 months now. How are OMCs expected to tackle business in such situations, going by your experience of the past?
I would assume that, before I start, I would like to say that I don't comment on the share prices, so that I leave to Harshvardhan only to deal with it. But I think in the last 6 months, we already seen the high crude prices of going above $120 or so. And now it has come to around 80. Last week, it has come down to 75 also. Again, there is some spike. So I would assume that the worst for the oil prices or the crude prices is behind. And oil marketing companies have tackled it in the last 6 months. So they should be in a better position to tackle it now. But at the same time, the prices have not been changed in last 6 months, maybe because the government wanted to control the volatility and insulate the consumers against the high volatile prices. But I think now there will be more reason as the prices become benign to make it market driven, and then it may be better for the OMCs, because otherwise it will hurt their directions.
Apart from prices, do you think there's also policy support for OMCs now from the government's end? Has that improved over the last 1 year? I'm talking, about this compensation on fuel, the LPG compensation of 22,000 crores as well. Your views on that?
No, LPG is a controlled commodity as far as the domestic LPG is concerned. And this mechanism had been there for quite some time, wherein there was a subsidy element, and to the extent of subsidy, government used to compensate. There may be certain time gap between the time it is supposed to be given versus the time it is actually disbursed. But the compensation on LPG had been there and continues to be so. As far as MS and HSD is concerned, they were decontrolled, and right now the issue is the pricing of MS and HSD, which is not been changed for some time. And I'm not very sure whether there is any policy changes to that effect as of today. But I think in the time to come, we should see the lower oil prices compared to what we have seen in the past, because the oil prices were driven by 3 or 4 factors. At least some of them have been settled, and I think now it will be hovering more towards 80 than 90.
Harshvardhan, how much is the, we import 80% of our crude oil needs. What is the latest proportion of Russian crude in this? And, will this at some point go into the calculation of, overall oil prices and windfall taxes, etc.? I mean, should we expect a reduction in those taxes on account of this, the mix going up?
See, last time when we had done this exercise, what we found out was Russian oil typically is about 15 to 20% of the total basket as of now. But frankly, no company has been officially declaring this, and these are like channel checks. And 15 to 20% of the total consumption is a fairly decent number to me. And the benefit should actually accrue to the buyers, which is essentially the refiners, which are OMCs and some of these private refiners. So if the oil prices continue to remain the way they are, maybe if not now, perhaps towards the new fiscal year, there is a good chance that the excise duty should be tweaked down a little lower for the price benefits to be passed on to end consumers. But until then, in my opinion, there is a fiscal that government has to manage, and at the same time they have to let the oil marketing companies also make some money.
Okay. So for the second half of the year, what are you penciling in, Harsh, for the oil marketing companies, both in terms of earnings? You briefly spoke about it a while back, but in terms of stock price as well, what kind of upsides do you see? Both for upstream and downstream, what are you targeting?
See, oil marketing companies or PSUs in general are well poised to offer an asymmetric payoff. If you were to plot the price to book value for these companies over the last maybe 12 to 15 years, these are trading at a lower band. And typically at this price, we have seen a strong valuation support. So there is perhaps a less downside. And if the oil prices remain benign, we have seen that these stocks can trade at a substantial premium to their book. So the payoff is quite asymmetric and very appealing to value investors. So our recommendation is basically, be overweight on, oil marketing companies. We like all the three, not that, we like one over the other. We like them as a pack. We are slightly cautious on the upstream, also given the fact that while these companies trade cheap, there is no great volume growth. And relative to the downstream, we tend to be underweight. Although from this price, I don't see a material downside either in ONGC or OIL. But if I were to allocate my assets, I will be more overweight on the downstream companies.
Okay, Mr. Surana and Harsh, thanks a lot for joining in and speaking to CNBC TV18, talking about the big move that we're seeing in the oil marketing companies. For the market, it's actually trending lower now. The Nifty is down almost about 90 odd points, perhaps moving in tandem with most of its global peers post the Fed's hawkish tone. The Bank Nifty is the only one that's holding fort, actually batting for the bulls this morning. Bank Nifty now in the green, up almost about 40 odd points. In fact, a good time to get Mitesh Thakkar for some technical trades. So we'll take a short break and come back with more. Stay tuned.